Okay, let me look at look at this graph of Google. Google released an earnings date before it was scheduled to be released, and so there was a lot of, and it was not good. So there was so much activity on this that it actually shut down the computers for a little bit. But I want you to see what's happening up here, okay? And as you follow this little dot, watch these numbers down here, all right? Okay, so you see 11, 8, 10,000, 11,000, 18,000, 19,000, 5,000, 1,000, 18,000. You know, it seems like the average trade volume is 10,000. And you can see this sort of just happening. There doesn't seem to be any sort of drastic change, okay? This is natural momentum. This is what the public wants to trade at right now. Now, there's a big one, but, you know, there's a not so big one. See? So I might have to adjust it to say maybe the average is, 12,000, 13,000, but per trade. But that's what they want to trade at. Now there's a 1,400 there. There's a you see that there was a 1,000. Well, right there. Okay, another 1,000. Now for a company Google size, and there's 900. Okay, the stock is selling at 751 per share. So this is heavy duty investment to be sure. There's 100. Someone just excuse me, to buy 100 shares at this point, someone just dished out $75,000. So I'm not saying this is penny fodder. It's by no means is it that. It's heavy duty investment, but it's happening at this 10,000 volume or shares per trade average. That's natural momentum, okay? But watch what happens right here, okay? The earning gets released, and some people panic. I can just imagine some people panicking as soon as they find out. I mean, I'm talking as soon as they find out. Okay, because I'll show you down here. The misses estimate, that's 3:21 Eastern time. Eastern time. So that would be 1:21 the time of this graph. But you might be able to see it's all 3 o'clock. Well, there was another one. There was another one that showed the release to correspond with the 12:30 time. This is Eastern Standard Time. Okay, so something happened right here, and a lot of people wanted to sell. Okay, so maybe there was, a sell at market order. And let's just say, 500,000. Well, let's just say maybe 5,000 orders were put in at sell everything I have at market or something like that. So the brokers may have realized, hey, we're getting a ton of sell orders. Something's happening right here because they can see this right away, and their computers are programmed to do this. Okay. And the other thing is, what happens if a lot of the people that have invested in Google say, look, I'm going to try to protect my profit because if things fall, I want to sell. I might not be around because I might be in a board meeting, I might be on vacation, but if I just enter a standing sell order at $740. In other words, as soon as these stocks fall there, because it was up here, it was 760, earlier today, at the beginning of today, somewhere around there, 757. So they're not really expecting this, but they say, well, if ever it falls to 740 a share, I better just sell. So they issue a standing limit order to sell at 740. You know what? As soon as this hit right here, all of those standing limit sells for 740 turned into market orders, and the computer knew it. Okay, so look down at the volume, 3,750. What if it decided to buy as much as it could right here? I'm talking about the computers at the brokerage firms, because it knew because it all of a sudden knew there was someone that was selling at this price, 740, but there were others that just said, just turn it into a limit at 740, and then so somebody must have put a stop, like you need to sell right at this, and then after this, no. But others that didn't do that, all of a sudden the computer is realizing if I buy a ton of this, in the sense of I borrow stock, okay, and then I sell it, because remember, whenever there's a trade, there's a seller and a buyer. I sell it at this point, and I got the money, and then right down over here, I buy the stock back to give it back to the owner, but I buy it at a cheaper price. I pocket the money. I pocket the $30 per share that I've earned selling it at a cheaper price because I know it's going to fall. And they do it actually right down here. Now I can't get the dot right here because it's so close. And then they do it again. They buy again, and they borrow stock, they sell it off, they get the money, then they buy the stock back right here. 30. See, now notice it's another 323,000 shares being here. And then they return the borrowed stock to the owner. So, up here they borrow stock, they sell it, they get the money, they keep the money right at hand. Down over here they use that money to buy the stock back at a lower price. They keep the difference, and they return the borrowed shares to the owner or whatever. Okay, now I'm not saying that this had to happen, and I'm not saying that they did it with all 323,000 shares. But the computers are programmed to recognize this sort of thing in terms of how many orders all of a sudden become active. See the limit order right here? The owner might think, well, this is never, it might become active, but that's when the stock is falling on its own. But there was a circuit breaker problem here, if you could remember what I showed you on the handout. And all of a sudden, these people, their orders went market. And because they didn't put a stop on it, they had to sell right away, or else they're selling down here or down here, and that's a big loss. But the computer's getting the profit because the computer can quickly recognize when to go short. All right? It might even be able to recognize down here when it has orders coming in to buy at 700, okay, and you might have enough of genuine orders to be able to buy down here and sell right here in the next 5 minutes or so. I mean, this would take how long is this? Would you say 5 minutes transaction? That's 12:38. Up here it's 12:30, so 8 minutes. It has to deal with real orders, but it can generate a lot of its own orders by buying internally just with its funds and holding it and selling or borrowing, selling, going short. So there's a lot of stuff that can happen here automatically by the computers, the way they're programmed. And not all of it is happening this way, but I bet a lot of this activity was computer programming that profited these broker houses up here. Now, the one thing you really should see, whether you believe me or buy into what I'm saying 100% or not, is that there was massive trading going on here. See that? Look at those volumes down there. I mean, massive. And, I know that they received some bad news, but not everyone gets this bad news right away. Okay, but enough may have gotten it for the computers to go into hyperdrive here and do what they could with all these limit orders that were just waiting around to be turned into market orders. And the people who had those limit orders had no idea that this was going to happen today. This represents natural momentum. This represents artificial momentum.